Hey guys, what's up? Hope you guys are having a great day today. My name is Matthew Spazziti here with New Millennium Wealth, and welcome back for another weekly market analysis video. So for this week, I was only able to find two different trades, one on the pound dollar and one on the euro Aussie. And we are, however, waiting on a few trades from a few weeks ago. I think the latest went back to August 22nd. So we have, I think in total, we have 6 different trades that we're waiting on. Here is the TradingView Trade Analysis Journal that I put together just to track my progress on my analysis and everything on TradingView, as it basically says. And yeah, so we're waiting on 6 different trades. We got a trade on the euro pound, the dollar Swiss, the Aussie yen, CAD yen, euro Aussie, and pound dollar. So as you can see, in terms of total, they're risking quite a bit of money on each one. 267, 195, 185, 156, 554. That's a massive that's a massive one right there. And then at 218, that's probably the third highest, because 267 is second highest. And we're also risking quite a bit of money. This, by far, the Euro Aussie that I just found is risking the most at $351. So we are profitable, as you can see over here on the right-hand column. We're at 3,461. This is my running total column. Basically, I just have a little formula here where it adds up whatever number is currently in this cell and then adds it to this cell, and then you get your answer here. So if it's a negative number, obviously, it's going to subtract and whatnot. But as you can see, though, we're at 3,461. If all these become profitable, then we're going to be way higher than that. So yeah, pretty cool overall. We'll have to see kind of how that works out, to be honest. I'm not really sure how it's all going to work out. I highly doubt they're all going to be winners because, my trading analysis is not quite that consistent. I don't think a lot of people are, but we could go through a winning streak. You never really know. So, that being stated, let's go ahead and jump into the charts at the pound dollar. All right. So on the pound dollar here, I found this trade a little while ago. You know, we are shorting, or we are still bearish, and there was a shorting opportunity that came up here. I don't really know whether the market is going to value this particular expansionary leg of the move right here. I'm not really sure. What I do, however, know is that we did create a new lower low, lower close here, and now we are retracing back up into previous structure, previous resistance. And at this point, I figured there's a pretty decent opportunity. It looks pretty clear-cut overall. We are overbought on the RSI, which is great, and we look like we're going to continue to just roll over. However, we could retrace. We could break above here, and if that is the case, then you would probably want to measure your fib retracement tool from this swing high to this swing low down here. And then you probably would be able to see another 618 opportunity if that's what you want to do. Now, there's another way you could handle this. In the event that the market does one of these numbers, let's go ahead and draw this in real quick. Right here. Okay, what you could potentially do is you could measure your fib retracement tool from swing low to swing high, and you could wait for a retracement down into a 618 retracement and hope that you would get a retracement back up here. Oh, I picked yellow. I meant to pick green. Now that could happen, or this could happen, and it could end up heading lower, and you could end up getting stopped out. So, I mean, there's a lot of different ways that you can handle these type of trading opportunities. Again, this is called the complex pullback, when the market rallies and in a retracement situation like this, kind of like what we had here, where the market came down, made a new lower low, lower close. I measured from, or I'm not sure if I did measure or if I wanted to measure. I'm not sure exactly what happened. I think I did measure from this swing high to this swing low. I got short here, and the market, instead of retracing and rolling back over, making me money, it decided to retrace again. So it had a two-wave. It had 2 waves of retracements, an extension, retracement, and another extension. And then it fell. And this is what we call in trading a complex pullback. It is a very annoying, absolutely a very annoying occurrence in the market. It's an annoying pattern that does exist. I absolutely hate it because it's typically the one thing that ends up stopping me out a lot is when the retracement really wasn't valuing or respecting this level. It really was more going to value this level. But I mean, how do you really know before it happens? Let's be honest, you really don't. You don't know what happens. You can look at all the indicators in the world. You can look at you can have all the chart analysis skills you want. You're never going to know whether the market is going to respect the structure level or respect this structure level. Now, I will say that this particular structure level is a minor structure level, and that this would be probably more of a significant structure point to look back on. But that being said, it's still very difficult to know what the market was going to do. It's near impossible. So that's why it's so important that you backtest your trading plan so that you know you have a statistical edge in the market. You know that you are statistically speaking, based off the backtesting that you did, that you are going to have a higher chance of success in winning more often, or at least winning enough to make more money than your losses, right? And that's why backtesting, creating a trading plan, and backtesting is so important. All right, now that we went over that, let's go ahead and hop over to the Euro-Aussie. Let's go ahead and close this out. Sure. All right, Euro-Aussie here. Again, we are bullish. I know that earlier I basically zoomed out, I think in my last video, because we took this is a second trade we're taking on the Euro-Aussie, and really not a lot of time has passed in between when we took our trade the last time. And I don't honestly remember if we got stopped out. But what I do know is that when you pull your cursor all the way over here, it was July or August of 2012. And since this bullish trend has occurred. So it's been 7 years that we've been in a bullish trend. And honestly, I think we're still in a bullish trend. We broke above this significant resistance level. And we broke above that somewhere around here, or somewhere around here. We actually broke above and everything, and it was pretty significant overall that we made it above that point. This is a very major resistance level that we were able to smash, along with this one too. So I think there's a very, very good opportunity that we're going to continue higher. However, after smashing through this resistance level, we may find that the momentum needs to recover, and that momentum's really not there anymore, and that we may actually retrace quite a ways down. If this one was to fail, you could draw your fib retracement level from here, from here, from here. I would not recommend drawing your fib retracement tool from this point personally. I would recommend that if this one ends up failing on me, I would recommend drawing your fib retracement tool here and try to take a secondary shot at this. However, it's also may be one of those things where if you break below, you may not want to try and take another shot at it. You may just want to wait and see what's going to happen. Is this a full-on reversal? You know, what's really going on? And that is a judgment call that you're going to have to make in your trading. Ultimately, there is really no way of knowing what structure level the market will value. I mean, heck, the market on a very long-term scale, the market could very well value this one, this structure level, all the way down here. And that could be precisely what happens. In the end, nobody really knows, and it's something that you just have to consider, and it's really more of a personal judgment that you have to make. Now, for me, I'm going to go ahead and try this particular trade right here and see what happens. You know, what we could find out is that, like I said before, that this level just is not respected at all in the market, and that it could be another level. And, you know, it's important, guys, that if you are in your trading and everything, it's really important that you zoom out of the charts like that. You look at the daily, you look at the monthly if you have to, you know, and you actually get a more bird's eye view of what's really going on, because right here on the hourly chart, this is a very significant retracement, or at least it appears to be, on the hourly chart. Obviously, the more you zoom out, the more you realize this retracement, it wasn't all that big, and neither is this. But on the hourly chart, it looks large. You can imagine what it would look like if you went down to the 15-minute chart, right? It looks even bigger on the 15-minute chart. So it's just one of those things, guys, where you just need to ultimately zoom out, do your top-down analysis, is what I like to call it and what my mentors have called it, where you look further out, you zoom out, you look at the hourly, the weekly. If you're trading on the hourly chart, you might want to consider looking on the daily or the weekly in order to get a good bird's eye view of what's really going on in the market. I mean, as I've said before, you have lots of different market scenarios that could be occurring. The overall market trend may be bullish, but you may have a situation where you have a tiny little bearish trend inside of an overarching bullish trend. And that kind of stuff happens all the time. So in order to get a good bird's eye view and to understand that, it's a really good idea to look at the daily. And if the daily isn't giving you a good enough of a picture, then I would, go ahead and look at the monthly. But here's a good example of this right here. So back in 2015 of August, we basically had a bearish trend. This was a bearish trend from 2015 all the way to 2017. So for nearly 2 years, obviously a little less than 2 years, but for almost nearly 2 years, we had a bearish trend despite the fact that we had just broken above the market right here. I mean, this looked very much like it was bullish at the time. We had come up here, we retraced, we extended, we retraced again, extended again. I mean, we're clearly bullish, although granted, you would not have known that if you had just seen this. This actually made it look, this had a retest right here, and this actually made it look like we were really going to be bearish again. But for right now, as you can see, you wouldn't really be able to tell if you backstep the charts a bit, but ultimately, we have a bearish trend inside of an overarching bullish trend. And how you would have been able to tell that this was bullish at this time was simply just the idea that we broke above here. Now, you could say, well, we could have been in a very, very long retracement right here. Okay, well, even if that was the case, we're bearish, and we have a bullish trend inside of an overarching bearish trend, right? And this could simply just be a reversal, which, honestly, that's what it looks like. It looks like a reversal to me. If you zoom out to the monthly, it looks like it could. We made a new lower close, and we didn't really make it new higher highs, so this does very much look like this is so far a bearish trend. Now, we could retrace all the way back up into 618 and then continue lower. That could absolutely happen, but that's going to take years upon years. I mean, you're looking at the monthly chart, right? So again, I just wanted to point that out. Make sure you're looking on the higher time frame. It does help you get a better idea of what the market's actually doing overall, but try not to get stuck in what's called analysis paralysis. So actually, let's go ahead and talk about this concept since we're kind of already done with the currency pairs right now. There's really not much anything else to talk about. So with regards to any potential trades that are on the market. So let's go ahead and talk about analysis paralysis and what that is and how you can ultimately try to avoid that in your trading. It's something that I have struggled with in my trading journey, and I know a lot of other people struggle with in theirs as well. But what analysis paralysis is they analyze the markets. They look at the higher time frames, look at the lower time frames. They utilize a lot of indicators and things of that nature. And before you know it, they're just trying to analyze the market so much so that they don't know, that they just get paralyzed. They don't know what to do. The trader looks at all the charts and they're like, oh man, I'm getting short signals, I'm getting long signals. I got this pattern, I got that pattern. I have this pattern on the lower time frame, I have that pattern on the higher time frame. I just don't know, I have no idea. And it's just so crazy with how it all works out. I mean, you would think that the more analysis that you do, the more prepared and the better off you're going to be. However, in this particular situation, the one that I just described, that's not necessarily how it works. A lot of times, it's very easy to overanalyze the markets and fall into analysis paralysis. One of the ways that I have found, and I would recommend you guys to pursue in order to overcome this, is having a trading plan and, of course, backtesting your trading. I know I say that all the time, guys. I know I do. And it probably gets pretty annoying hearing me say this. But, guys, you really need a trading plan, and you really need to backtest that trading plan over historical data. Now, in the future, I will show you guys a platform that y'all can use to basically backtest your strategy over. If you want to go check out the website right now, it's ninjatrader.com. It's a really great website. They will give you the ability to sign up for a free demo account that'll give you free historical data so that you guys can backtest your strategy. And that's actually how I backtest all my strategies, is I use NinjaTrader. I prefer NinjaTrader 7. They do have a new one called NinjaTrader 8, which is very good, really, but I'm not very accustomed to it, and I definitely prefer NinjaTrader 7 over NinjaTrader 8. But it's, to each his own, right? But it's a really great software, it's a really great software overall, and you guys shouldn't really have any issues with it. You can go over there, sign up for a demo account. I'm not affiliated with them, so I'm not going to make any money or kickbacks or anything of the sort by recommending it. I just think it's a good charting platform for historical backtesting purposes and things of that nature. TradingView is absolutely amazing. The biggest issue that I have with TradingView is that TradingView does not allow you to have a lot of data, a lot of historical data. So it makes it very difficult when you're looking to backtest. But guys, that's how you would ultimately avoid analysis paralysis. You need a trading plan. That will really, really, really help, because it will define what you need to look for in the markets in order to get involved in the markets, right? And in the end, when you backtest it, you consistently know what you're looking for. Now, I would highly recommend that you start off, if you're starting down your journey and everything, don't start off with multiple trading strategies. Start off with just one trading strategy and call it good. So before you start forward testing, which is testing with live data, kind of like what I'm doing on TradingView, I'm kind of doing it a little backwards. I'm actually testing the strategy over all these currency pairs that you see here on the right on TradingView, despite the fact that I haven't backtested the strategy. This helps me get a good feel for what I want to put in my trading plan and everything. Now, I already kind of have a trading plan for this trading strategy. It's already down on paper, but one of the ways that I used to create it was that I actually traded on live data, not with live money, not with real money, but I traded on live data to try and get a feel for what I really wanted the trading plan to be about. Or so I was kind of brainstorming by doing that, and it gave me the ability to say, yeah, I didn't like trading it that way. Yeah, I mean, like how would you handle how would you handle complex pullbacks? Would you try to reverse your trades after it breaks above the previous retracement instead of rolling back over and continuing the trend? Or would you try to take a secondary trade? There's multiple ways in which you can handle it, guys, and this is one thing that I'm kind of debating on how to handle personally in my own trading. And I really haven't decided. I'm torn between either reversing the trade and trying to take a trade in the opposite direction after it breaks above and closes above its previous retracement. But I'm also looking at the idea of just literally sitting on my hands after getting stopped out of a trade and waiting for confirmation of direction. Because that's really one thing that I think is very difficult, is waiting for that confirmation to occur. So start a trading plan. Backtest your strategy. This will help you to avoid analysis paralysis. And if you keep struggling with that over and over and over again, a lot of it's just practice. You got to practice looking at charts. You got to practice going through and combing through charts and seeing if you can find those patterns. That will really help you. But identifying a trading plan, and then the trading plan basically is a filtering system. It gives you the ability to filter out what you see in the markets so that you don't get paralyzed and whatnot. But a lot of it comes with practice in the charts, having a trading plan, and backtesting. That's what a lot of it really boils down to. That's how you avoid analysis paralysis. So it's pretty simple overall. It just takes time, guys, and it takes a while. I mean, as you can see from the TradingView account, I've only traded. I started this account 4 years ago, and I used it primarily just to look at charts. I wasn't taking live trades or anything. Now I'm actually practicing my analysis by taking trades in the market on live data. Again, not with real money. So it's still a demo account. They call it paper trading, if you never heard of that term. You basically write down your trades on a piece of paper and you track them that way. You don't really need to do that anymore. We have Excel and all sorts of stuff a lot of different kind of spreadsheets that you can utilize to track your trades, but you get the idea, right? You're taking hypothetical trades in order to help you get an idea and build your belief and grow your skill. So guys, that's what this is all about, growing the skill. It takes time. You can expedite it by putting a lot of time into it, by closing yourself into your room and basically backtesting for hours and hours and hours. And honestly, I don't think that's a bad idea. But all in all, it takes time. So you're just going to have to put forth the effort. Like anything good in this world, it's going to require a lot of effort and a lot of time to get anything. So if this is a skill you really want to do, understand that you're going to be putting a lot of effort into it, and it's not going to be fast. And also understand it's not going to be a get-rich-quick scheme. Unless you have a lot of money, guys, the best traders in the world only make 2-3% a month, which factors out to be about 24 to 36% a year, depending on what you're doing. And in reality, you're not going to be just making 2% a month. That every single month. That's on average. Some months might be 12%. Some months might be -5%. You never really know, but on average, the best traders in the world are at somewhere around 2 to 3% a month. And that's annualized, averaged over an entire year. So if you're making 24 to 36% a year on average, you're going to need a fair amount of money to make that work. Now, that's still better than just buying and holding some kind of investment, right? That's still better than doing that because their returns on investments are even worse. But still, know what you're getting into, all right? Know the realities of it all. In order to make money, you do need to have money. And if you're struggling to make money, then you need to find a way, take a secondary job, cut some expenses back, clip those credit cards, do whatever you need to do to get some money to trade with. If you start off with a $3,000 account, which is the amount of money I'm planning on starting with when I actually finish my backtesting, then it's going to take a long time to grow that account. It would be best if you started with a $3,000 account and then continually added money to it as you were trading. That would grow the account faster. But again, I'm not about to do that unless I build a belief system and I have historical data to back up the trading plan that I tested. So anyways, guys, hope you enjoyed that. Again, create a trading plan, backtest that trading plan, and then forward test it. And a good rule to go by is 100 trades per market, per time frame, per trading plan, or per strategy. So 100 trades per strategy, per time frame, per market. Okay, so if I was going to backtest this strategy on the Euro Aussie, I would backtest this one strategy on the Euro Aussie on the 60-minute chart. Done. 100 trades. 100 trades or a minimum of 5 years. If you get 100 trades before the 5-year mark, that's fine. In many currency pairs, that will happen to you. But the longer the period of time that you have tested it over, the better. The bigger your data pool is, the better. So just keep that in mind. Well, hey guys, I hope y'all enjoyed the video. If you haven't already, don't forget to check out the website at newmillenniumwealth.com. Subscribe to the newsletter so you guys can be the first to get informed of anything that I'm doing. Also, make sure that you follow me on TradingView. It really helps out my numbers. The more followers I have, the better reputation I get, the more likes I have, and the more views I get. It all really helps me out on TradingView and everything, and it just really helps me out in general. Also, don't forget to like the videos and subscribe to the YouTube channel. So if you guys know anyone else who would be really interested in this trading stuff that we're doing here and would love to see someone go from not consistently profitable to be consistently profitable, if you know anybody who would enjoy that, please share the channel, share my videos, help me get this word out of the financial freedom, liberty, and prosperity, guys. So if you guys will do that for me, I'll see you guys in the next video. Remember, know the risks, plan accordingly. Have a great day.